Looking for insurance. Bank asks for hazard insurance, but you want a homeowner's policy to cover all the other items that are there. The bank will ask for a maximum deductible of $1,000. You choose a less deductible, but it'll be more expensive. I would suggest you look for replacement cost coverage because you don't want to have an item such as a big screen TV or et cetera where the insurance company is depreciating it because of its age. You really just want your big screen TV replaced or your other items replaced. So look for cost coverage. I would suggest you shop for at least 3 different insurance quotes. You might start with your auto insurance company. Compare them side by side. You're sure welcome to bring them in to me or to your agent, Michelle, and go over those to determine the best coverage for you. Because each policy will have its own little twist to it on what advantages and what disadvantages. Here in Florida, all the policies will have hurricane insurance on it. You'll have a 2% deductible. It's something to review and be aware of in case, heaven forbid, something like that was to happen in the future. Please do shop the insurance and look at the quotes. I'm sure Michelle will agree with me that we've had insurance quotes as much as $200 or $300 a year between 2 different companies. That could be a difference in your payment, of $25 or $30 a month that you could save by choosing a different company.
That's right, Ron. Great information on that as well. Also, the lender is going to require an appraisal. They're not going to want to finance a house that isn't worth what we're offering to pay for it. So the appraisal is going to have to be done as well. Should it come in low, there are many ways that we can work around that. We can usually, 9 times out of 10, go to the seller and have them lower the price because if they can't sell it to someone else for a higher price, if they can't sell it to you because it can't be financed. So appraisal is really a big issue when it comes to price. So if appraisal comes in low, we usually can get the seller to negotiate down to what the appraisal price is, or you may decide that you still want the house and you can pay a little bit more. Usually that's a tough issue for a first-time buyer, and you don't want to go too far over value, but it is something that you can consider. Or at that point, that's another one of those places where you're free to say, well, I'm not going to pay more than the house is worth and I can't get financed, so I'm going to go find another house. So there's several different ways that you can get out of the contract should things not go correctly and be the house that you thought that the house was that you're buying. So appraisal is completely for your benefit. Now let's talk about the other side. Should the appraisal come in high? Well, you just kind of keep that to yourself until after closing, and we celebrate because you just went into a home with equity, so that's great. And that means that your agent negotiated a great deal for you, too. All right, one of the last things we have to talk about is title. We have to make sure that the house has a clean title in order to be able to close. That process starts pretty much from the beginning. It goes on kind of in the background and doesn't involve the buyer too much, but be aware that it's there. It can occasionally cause a stumbling block, but it usually is something that can be cleared up pretty easily. So we have inspections, financing, survey, insurance, both regular and flood. At the closing, we'll talk about taxes. Taxes have to be paid up to the day of closing, and that is usually part of the closing cost as well. And your appraisal. So that pretty much covers the process. At the very end, you're going to get a HUD, which is the government form that allows us to close on the house and transfer the title to the new owner. And you'll have to come to closing, sign it, and agree that you're accepting your mortgage and you like the way it is, and sign the HUD that shows that everything is pretty much the way that you thought it was, and pay any difference between what the bank is paying and what your purchase price is. So the HUD will also give you an idea of how much money you need to bring to closing. Hopefully, if we've negotiated it the way you wanted it, we can keep those costs as low as possible for you. In the meantime, while we're going through that process, it's anywhere from 30 to 60 days, sometimes a little further. We don't want you to have any new big uses of credit. We don't want you to go out and get married, and if you get divorced or anything, you've got to let us know. Those kinds of things can really derail the process. But hopefully at this point, we're ready to hand you the keys to your brand new house. We want to talk about the fact that you should have a little bit in reserve in case any repairs need to be done or you want to make any changes, anything comes up, that kind of thing. And then you need to go as quickly as possible and file for the homestead exemption. And I'm also going to let Ron talk to you about the homestead exemption.
Homestead exemption is allowed in St. Johns County. It's up to $50,000. That takes away from the value on your taxation on your property, and that easily could save you $600 a year. If you don't file for your homestead exemption, nobody will come to your door and say you should have filed. You'll just have a higher tax bill. The homestead exemption, you need to file by March 1st, figure April 28th of the year that you purchased the home, as long as you live in there, you won't need to refile. They'll send you a postcard every year asking if you're still living there, and if you're still living there, you don't have to do anything. So please put on your notes, do not forget to file for homestead, because when Michelle is completed and I am done, no one will know whether you filed or not until you get your tax bill. Over the years, I get calls from customers that have forgotten to file. You can always file the next year, but why pay $600 or so additional taxes when you could have avoided it by filing? I want to step back on appraisals for 1 second also. The lender, myself, will be the one that orders the appraisal. You're always entitled to a copy of it. If I have your email address, I'll be glad to email a copy of it to you. They're usually 15 to 16 pages, so they're quite extensive. And if you choose to read them, you could spend most of the evening reading the information. That's why the lender always looks at it as sales price or appraisal. Whichever is less is where the calculations are taken from. So if it comes in low, we will do our best to work it out. If it comes in high, we'll be doing a high five and moving forward.
Okay, great. I think with that, we've pretty much covered the topic as we thought we were going to, but we're here now to answer any questions that you may have, so please send them on in to us.
Okay, we have a question. Who qualifies as a first-time home buyer? Michelle, I'll let you handle that one.
Okay, great. I think we're talking about qualifying as a first-time homebuyer here as the $8,000 tax credit is considered. That's a big thing that's getting a lot of people out into the market right now to get their first home, and it's quite a cool deal. Basically, if you haven't owned a home at all, you're obviously a first-time buyer. But a lot of folks don't realize that if you haven't owned a home in the previous 3 years, then you can also qualify. There are a few small details about that if you're still showing it on your taxes or so forth, but for the most part, if you haven't owned a home in 3 years, you can also qualify for the $8,000 tax credit. Let me point out that it's up to $8,000. Ron just pointed that out to me. So if you bought a house for $75,000, which I haven't had happen yet, but it's possible, then you would only get $7,500. So it is up to $8,000.
Okay, Ron, I think I'm going to let you elaborate on the tax credit just for a moment and also explain the credit for people who are not first-time home buyers.
Okay, under the new IRS rules, which there is a IRS PowerPoint that Michelle will be glad or myself be glad to email you. If you just drop us an email, our email addresses are on the presentation. You're always welcome to drop us an email that we can answer for you. The $8,000, as she mentions, first-time buyer, up to $8,000 or 10% of the sales price. So if you purchased a house for $78,000, you could get $7,800. You can file that as soon as your house has closed and you have a closing statement on the current year's taxes, or you can wait and file it on your next year's taxes. Also available with the new law that just took effect that Obama put in for us, that you can get a $6,500, up to a $6,500 tax credit if you've owned a home and lived in it 5 of the last 8 years. That's available to you. You must get a new purchase contract on either of these by April 30th, 2010, and close by June 30th, 2010. So there's a real advantage to buying right now, whether you're a first-time buyer or a buyer that wants to move their residence and have lived in the house for 5 of the last 8 years. Again, if you want a copy of this IRS presentation, please email us.
Okay, we have another question. What if something happens along the way to closing and I can no longer qualify for the mortgage? Ron, I'll let you handle this one.
This comes up from time to time. I had one recently where they were in a car accident and the car was totaled. I can usually work around most issues. In this case, they purchased a new car with the same payment as what they were paying, and I had actually no effect whatsoever. But please, please, if something happens in your life, please let us know. Let Michelle or myself know so that we can fix it. In most cases, we'll be able to figure a way to work around it or give you an option. If you lose your job, maybe we can go back to the seller and say we need a little longer time frame to give you an opportunity to find your job. Or any of the many issues that would happen in your life, Most cases, we'll figure a way to get it done. You may have to jump through a couple more hoops, but we're looking to get this loan closed so you can move into your new house.
Okay, we have a question. How long does the process take to buy a home? Michelle, I'll let you handle that one.
Okay, that varies pretty largely. Really, it depends on how quickly you'd like to get a home. The process of looking for a home can take, a few days up to several months. Hopefully, we can narrow that down and make it work to where you'd like to be. But realistically, if you're in a hurry, you can actually purchase a home in about 30 to 45 days. Lending for FHA and USDA takes a little bit longer than conventional, so we're looking at 45 to maybe 60 days. Now, if you're interested in purchasing a short sale, and you can do that as a first-time buyer, but at this point it's a little bit sketchy because you're wanting your $8,000, you're wanting to close by June. We may not actually be able to get you closed by June at this point in January. So those really do take quite a while. Sometimes they can take just 30 days. Sometimes they can take much, much longer, and we won't have a whole lot of knowledge about how fast we're going to go until we hear from the bank. That's the biggest problem is hearing from the seller's lender. So as a first-time buyer at this point trying to get the $8,000, you may want to avoid a short sale. A foreclosure we can get closed just as quickly as a regular sale, but you're looking to roughly no more than 60 days to get from actually finding the home to moving into it. I hope that answers the question.
One more point on short sales. What you find is a short sale, just the term is a new term that hasn't been used in years until we got back to this. It's where the lender chooses to take less than full amount on its loan so that the house can be sold. An example would be, say the house can sell for $200,000 and the amount owed on the house is $250,000. In normal reality, that would be no way that we can complete that transaction. A short sale means that the seller would go to the bank holding the note for $250,000 and say, you need to reduce this note down to say 180 or 190 so that I have costs to be able to be paid, the real estate agent can be paid, and the house can be sold. Lenders will do that on a case-by-case basis. When she mentions it may be 30 days or it may be several months, some lenders are taking quite a while to get through the process and make a determination on what they're willing to take as a short pay, meaning short sale on the property. So where you've got a lender involved, sometimes Michelle will be able to find out that it'll be quick on a short sale, and sometimes she won't, and it's a waiting game. As far as foreclosures, that means the bank already owns the property, and since it's now in their possession, they're much quicker to make that decision than they are on a short sale. Hope that helps you explain a little bit more about short sales.
I'd like to thank everybody this morning for joining us, and please contact any of the three of us if we can be of any further assistance. Thanks again.
Thank you all.
Thank you.
Go ahead, Michelle.
Thank you very much. Just know that one of the reasons we suggest that you have a trusted agent and trusted lender is because, just as Ron said, we are here. You can call us all anytime, and we'll be here for you through the whole process. So we'll look forward to hearing from you, and good luck. Thank you.
Thank you for joining us, too. This is time out of your day, and I know it's important. I really appreciate you taking the time to listen and hear what we had to say, and I wish you all the luck in the world.